It's a brand new month, and thank God we do have days of 55 minutes of business. That's what we do here on Business Incorporated for this very first trading day in the month. Here's what we have prepared for you. There are talks of electricity tariff hike in Nigeria, and some analysts are looking the way of renewable energy. South Sudan pension scheme has some uplift to set free trapped cash. Securing the future. South Africa is looking the way of the mining sector. We'll give you the details. It's a beautiful Monday afternoon. Welcome to the program. I'm Amy John McQuarrie. We'll start doing business right now from the global space and tell you that oil prices rose on Monday after U.S. President Donald Trump imposed tariffs on Canada and Mexico as well as China, raising fears of supply disruption, though gains were capped by concern over what could be an economically damaging trade war. Look at the numbers for this afternoon. More than 1% increase is what we see. 1.03% for Brent, yet it is still less than the $77 which we had most of last week. So for this afternoon, $76.45 a barrel. WTI, $73.89. That, as you would expect, closer to the world, to the United States, has more effect. So you see almost 2% increase, 1.88%, and it's because of that sweeping tariff on goods from Mexico, Canada, and China, which kicked off on Saturday, kicked off that trade war. That was first the threat, now it's becoming reality, and say it might reignite inflation in the world. Of course, there's been corresponding a tariff from those countries. We've seen Canada talk about 25% tariff from there, and a whole lot other countries also are looking at that. Well, the tariff, which will take effect from February 4, that's tomorrow, include the 25% levy on most goods from Mexico and Canada, with a 10% tariff on energy imports from Canada and a 10% tariff on Chinese imports. Tariff world we're living in now, and the impact the World Trade Organization has warned would not be good for anybody. GDP, global GDP, might be wiped off in double digits. That's the warning from the World Trade Organization. Now, gold prices fell nearly 1% on Monday after rising to an all-time high in the previous session as the US dollar strengthened, following, of course, that on mounting fears of global trade war following United States President's tariff measures. Look at the numbers this afternoon. 0.9% in the red, $2,776.05 per ounce. That's for spot gold. That was the only survivor on Friday. Remember, all others were in the red, but we see it has joined almost 1% in drop. Same for US gold, 2,810. A lot of traders seem to be taking hedge in the metals market, but we see it still going down. Spot silver is down even more than that, 1.4%, $30.87. Platinum is also down almost 2%, $958.72, while palladium 1.7. Huge drops that we see on the metals this afternoon, in spite of investors looking for how to take hedge right as we see the dollar strengthened. Now, to further enhance infrastructural development in Nigeria, the European Union, through its special purpose vehicle, which is called Global Gateway Initiative, said it will disburse 150 billion euros in 4 years by 2027 to Nigeria and other African countries. The head of cooperation at EU delegation to Nigeria and ECOWAS, Massimo De Luca, who disclosed this during a media briefing in Lagos, explains that the initiative is deliberately designed to enhance connectivity, promote sustainable development, and strengthen economic ties between the EU and its partner countries, including Nigeria. According to Mr. De Luca, the EU has projects in Nigeria and in the region during the period of 2021 to 2024 as EU delegation in Nigeria that they've implemented about €700 million cooperation from the EU in Nigeria alone. Now, amidst talks of possible electricity tariff hike as the federal government hints at a further reduction of subsidy, the Lagos Commodities and Futures Exchange is partnering the state government to expand opportunities for private sector participation through the capital market. This was the crux at the meeting tagged Building a Competitive Electricity Market, and it was held in Lagos. Strategies to attract investment in a bid to build a competitive electricity market in Lagos has brought policymakers, potential investors, and capital market players together. This follows the signing of the Electricity Bill 2024.
Lagos Commodities and Futures Exchange, as a key player in the capital market, recognizes the transformative potential of the energy bill. It is not just a policy framework, but a call to action for all stakeholders to collaborate, innovate, and channel investments into Lagos State's evolving electricity market.
We are here to investigate practical approaches, establish alliances today through what we call a deal room, and set the route. We think there's a great chance that the private sector through the capital market will be crucial to this change. I'm very happy that the Lagos State government has decided to name Energy in Lagos Clean Electricity Markets. So effectively, we're not only looking at the markets, we're also looking at a clean market to be able to be in compliance with global best practice.
Exploring the synergy between energy as a commodity and the capital market with opportunities for maximizing revenue and profit is a theme here.
Power exchanges operate in a similar way like your regular stock exchanges. There will be short-term spot markets, and in that you have day-ahead and intraday markets where power is traded for either the current or the upcoming day. But in general, you can invest in the power market largely in two primary ways. You're either buying equities or you are investing in bonds of the electricity company or utility companies that are supplying the energy, or of the companies making components or equipment that is needed to create power. These companies will typically have three products to sell: capacity, energy, and ancillary services.
Thank you very much. Good afternoon. Please, let's be seated.
For the state government, this coordination is for the greater good.
The number of generators in our state is enough to power our state, Ogun State, and probably Oyo State. The whole country, we have 3,500 megawatts or so. But the reality is the generator in Lagos, if you go to all over the place, Este, Magodo, all over Ikeja, whatever, it's more than that. So the reality is we are spending the money. It's just in an haphazard way. So if you can put resources together and do this way, we are really, everybody will have power, we spend less, and people make more money.
The government has reiterated its commitment to create an enabling environment for investors with a focus on promoting sustainable development and economic growth. So let's stay on that conversation, the electricity and energy market investment around that with the Director General, Center for Energy Investment and Innovation, Dr. Gemma Sulaiman, joins us virtually. Dr. Sulaiman, good afternoon and welcome to the program. So I wonder if you heard that report talking about using the capital market to raise money and all of that. And of course, this follows the Electricity Bill Act, which has now been signed into law, and all of that. I would like to know what you think about that bill to start with. I know that the president has said that there's a target of having about 50% renewable energy mix by 2030, but some would say, can we first of all start from what we have? So we have a new law now that empowers states to generate and distribute and all of that. And we heard heard that how Lagos State is planning to use the capital market. How you think this can be efficiently used to provide funding and electricity, affordable electricity that is, to Nigerians?
Thank you very much, Ini. Thank you very much, Ini.
I can hear you, Dr. Sulaiman. Yeah, go ahead.
Yes, let me first start with some of Nigeria's energy policies so far, such as the REMP, the Renewable Energy Master Plan, which highlights 30%, 36% renewable energy electricity out of the Vision 2030 of their own.
Hello, Dr. Sulaiman. Could you go ahead? I can hear you, actually. Okay.
Hello, Edika, are you with me?
I can hear you. Please go ahead.
Okay, my network is bad. So I said, let me start with Nigeria's energy policies so far, such as the Renewable Energy Master Plan. The Renewable Energy Master Plan seeks to enhance renewable electricity by 36% of total generation by 2030. Also, there is the 30-30 national target, which is seeking to achieve also 30% of renewable energy by 2030. 2030 is in the next 5 years from now. Then we have the energy transition plan, with its outline on towards net zero by 2060. First, I would like to commend the President on his recent outing and participation at the Mission 300 Africa Summit in Dar es Salaam, the Tanzanian capital, and also for Nigeria's reaffirming its commitment towards Mission 300. But 50% target benchmark as set by Mr. President, personally for me, I would say that's partially realistic and also very ambitious. The Mission 300 project in itself by the World Bank and the African Development Bank is an ambitious project which seeks to advance across board through partnership and collaboration, with 12 countries as member countries submitting their national energy, what is called the National Energy Compact. So which is good. Nigeria setting a benchmark of 50%, but in addressing our energy and our national energy security and also energy provision drive, government needs to come up. I believe government needs to come up with a unified energy governance and investment framework. And in my opinion, it will have to government will have to come up with the National Energy Transition Commission itself, charged with the responsibilities of formulating energy transition regulatory frameworks and implementing all energy transition related activities with regards to the ETP. One of the advantages is the recent bill you're talking about of state being empowered to generate power. That's an excellent one. Government needs to look into critical funding areas in the hydropower sector. So I think that would be my own contribution at now. But beyond all of these benchmarks and what I view, what is more critical at the moment is funding, investment. Critical investment is required, and government is in the right direction. We've seen with the recent World Bank Tariff program with a commitment of $700 million or so. The Rural Electrification Agency under the leadership of Abba Aliu is also doing excellently well. So each of the states must anchor their own program towards achieving the national energy security holistically. Thank you, Eni.
Yeah, but what are the opportunities for the private sector? We see Lagos State talking about going to the capital market. What are the opportunities for the private sector to contribute to this funding and also the incentives for it?
That's a good question. So there are several opportunities in the renewable energy sector, I believe. the solar mini grids and off-grid solutions. The rural electrification agency estimate 80 million Nigerians lack access to electricity, making mini grid and off-grid solution highly profitable. So there are programs like the NEP, which offers grants, the Nigerian Electrification Program. It offers grants for private developers. Companies like Hawks Power, Lumos are already making an impact. Private sector players can can drive towards this within the ambit of collaboration. In the areas of energy efficiency, energy storage is also a big avenue, a big investment opportunity, which government must support towards its innovative financing model, such as the pay-as-you-go system for solar users, basically. And in the green hydrogen aspect, Nigeria has vast natural gas and biomass resources. There's potential for green hydrogen and bioenergy investments, especially in industries looking to decarbonize.
So now that we have
private sector players can come in partnership with government as a regulatory body. I was in the last Africa Energy Investment and Mineral Resources Summit, AFNIS 24. I proposed a Center for Energy Investment and Innovation to the government to establish what we call the NET Fund, which is the Nigeria Energy Transition Fund, bringing private sector investment players as critical limited partners and government as regulatory body, with commitment from all parties, and outlining outlining basically an investment roadmap.
All right, Dr. Suleiman. So now that we have talks of probable electricity tariff hike again, because the government is saying they want to reduce subsidy again, how do you see this feeding into this renewable energy plan?
Yeah, Amy, thank you very much for that question. The cost of renewable energy system, especially solar, battery, and all of that, is determined by the volatility of the forex in itself right now, because most of these are imported items, basically. Government must scale in local manufacturing, establish gigafactories for this equipment to be manufactured locally so as to drive down cost. And like I mentioned, innovative financing model such as the pay-as-you-go leasing models so far has proven successful, and government needs to promote synergy between the power generators, and also expand the net. So subsidies, I believe government subsidies and incentives are also important. This will require the government to expand the solar power Niger program, which aims, I believe, to install 5 million solar homes and reduce importing duties on key components, solar component basically, which this also will further bring down cost. But above all and beyond is anchoring or fostering public-private partnership between government, development banks, private investors, and that can help fund large-scale projects, reducing cost through economies of scaling, basically.
All right, Dr. Jama Sulaiman, the Director General, Center for Energy Investment and Innovation. Thank you so much for your time this afternoon.
Thank you, Ini. Thank you.
Let's take a break, and when we come back, we'll head to the markets. And of course, there are other conversations awaiting you on the other side of Business Incorporated. To stay with us. We head to the markets now on Business Incorporated. Look at intraday numbers. Well, this very first trading day of the month of February, we see at intraday the NGX is positive 0.05%. The market was actually positive for January. The Naira too was positive. We should celebrate that. You know, I mean, when we see a Naira having value, I guess it might not be where we want it to be yet. hopefully, but there was a positive movement in January, and more importantly is the fact that there was a level of stability within a certain level. That of course will help investors and manufacturers to plan. So yeah, we had a positive Naira in January. We also had a positive NGX. So for this afternoon, we see we're back on the 104,000 level after gaining 0.05%. JSE was actually down intraday 1.24% at 84,890.75. Other parts of Africa, Egypt is negative intraday, almost 0.5% negative, 29,775.52, while Nairobi is also negative, still hovering around this 128 level. We've seen it hit 132, but since last week hasn't been very positive for the Nairobi Stock Exchange. So we see Friday's close in the red, 0.16%. From there, we move over to the Middle East and see a lot of negative markets. I wonder if it's the Trump effect that is spreading all over here, you know. Dubai is red, 0.35%, 5,162.02. Abu Dhabi also red, 9,562.07. Look at other parts in that region. Saudi Arabia is red. Qatar is also in the red, so that's the Tadawul of Saudi Arabia, 0.58%, 12,337.79. Qatar, almost 1% in the red. A red market right there in the Middle East. Now to the moving market, the moving factor of many markets since Saturday in the United States. See the sentiments right there. I guess you see for yourself, it's all red. From Dow Jones to S&P and NASDAQ, and futures tumbled to kick off a new trading week. Investors are weighing those tariffs. It has spreading effects, you know, on a whole lot of fronts. Key goods from key trade partners and potential impacts on economy, corporate profits, you know, all of this are tied to it. So that's why you have the Dow Jones more than 1% in the red, S&P more than 1.5% in the red. The NASDAQ, these guys have not recovered from the deep seek, and so we see them down almost 2% in the red. That's in the United States. Of course, we do know that President Donald Trump is at the bottom of all of this. Those tariffs pronouncement that he made which started on Saturday. And then we go to Asia and see, can't be any different. We know all markets are connected, from the Nikkei of Japan to South Korea. Imagine more than 2% down in one trading session. That's serious. Hang Seng slightly down. Perhaps they escaped a bit of it. Shanghai is also down 0.06. In India, it's also down 0.52. Of course, it's all about President Donald Trump. And those pronouncements that he did over the weekend. All right, so just before we head on a short break, we can tell you that in South Africa, the issue of the mining sector is top on the list, as the Minister of Minerals, Gwede Mantashe, has emphasized that Africa must share in the continent's wealth. I guess Africa has no choice but to share at this point when we see that America is taking care of itself. He was speaking on a future-proofing mining and is asking African nations to be honest with one another and not present a false image of their realities. And he made his remarks at an ongoing Investing in African Mining Indaba event, which is happening in South Africa, in Cape Town, South Africa.
The mineral wealth that the people of South Africa ought to benefit from and share. In 2024, we undertook a study on the state of mining in South Africa. Let me explain why did we do this study. We did this study because many people were saying mining is in decline in South Africa. used to be a great mining country. It is in decline. And we came back after the start and said to them, gold mining is in decline. Mining is on the rise. Very big contradiction, because we're a major gold mining country. People equated mining to gold mining. When gold mining was in decline, everybody believed that mining is in decline. But more important there, we discovered that a number of minerals are growing. We're leading in a number of minerals that are required by today and the future.
Well, the call for Africa to look inwards, beyond even mining, that's still on. Let's take a commercial break now. When we come back, other segments, other African stories, and of course, the crypto is in red. You want to see how red it is? That's on the other side of the program. Stay with us. As part of... Welcome back. Still Business Incorporated here on Channels Television. Let's head to Berlin now. I know we cannot run away from that issue around the tariff pronouncement by President Donald Trump, but the world's first supranational legislation regulating artificial intelligence and the EU's AI Act went into effect yesterday, February the 2nd. So now let's get more on that. And I know about the tariff also with Chiponda Chimbelu. Hi, Chip. I should say Happy New Year. This is the first time I'm talking to you this year.
Happy New Year, Annie.
Yeah, so this AI regulation took effect from yesterday. And I know this is also driven by the DeepSeek from China, and everything is connected, even with the tariffs.
Yeah, Ini, with the EU's AI Act going into effect, some of the biggest changes that we are seeing involve companies or organizations and what they can do with artificial intelligence in the European Union. Now, for instance, AI systems cannot be used for social scoring, and that would be artificial intelligence programs that evaluate social behavior and reward or punish people based on what they do, say if they have a good financial history or even traffic offenses. And AI facial recognition systems will be also banned, except for the police and security authorities who may use them for prosecuting some criminal offenses. Now, also companies that develop or use AI will have to evaluate their systems. The AI industry will be expected to look for potential risks and ensure that they are taking measures to tackle them here in Europe. Now, these are rules that are not just about protecting European consumers, they are also about ensuring AI is being used responsibly in Europe.
So, but how does this compare to what's going on in the rest of the world?
Well, you know, just months after the EU's AI Act was approved last year, companies became critical of it, and smaller businesses were especially worried about compliance costs. And the big tech giants like Facebook and Apple, now they've been holding off releasing AI features here in the EU over fears they could face hefty fines if they do not comply with the bloc's rules. And right now, it doesn't look like any major markets are copying the EU's landmark AI rules. Now, following his inauguration last month, President Trump revoked Biden's 2023 executive order, which regulated the risks of AI in the US. And Trump obviously reversed that and announced an investment of $500 billion over the next 4 years in the Stargate project. And the EU has been trying to respond to that. Now, this is perhaps why we heard last week EU Commissioner Ursula von der Leyen promise a broad AI strategy for Europe. And EU, of course, the EU has been lagging behind in terms of investment. Now, in December, Brussels said it would invest 1.5 billion euros. Now, that is, of course, a drop in the ocean compared to the $500 billion that the United States announced last week, or just over a week ago.
EU ruling the world. And just a couple of hours ago, we did see Eurozone inflation. I wonder if that's affecting the markets intraday.
Well, European stocks have been tumbling, and of course, it's really been more about the tariffs here. Obviously, it's the Paris and stock market and Frankfurt stock markets. They opened around 2% lower before recovering only slightly, and it is obviously the auto industry shares that are among the worst hit stocks. Porsche, BMW, Mercedes, and Stellantis have all fallen more than 3%. Now, there's fears that U.S. President Trump's tariffs against Canada, Mexico, and China could escalate into a broader trade war. And we have to remember that on Friday, Trump also said that tariffs on EU exports to the US would happen pretty soon. So that, of course, has put European markets under pressure. And there have been some responses also to potential US tariffs here. The bloc's leaders say that tariffs would be bad for both the EU and US economies, and they have warned that the bloc will retaliate. Now, of course, in terms of economic data, you did mention those inflation figures for the Eurozone, and they show inflation rising slightly in January to 2.5%. Now, that was, of course, unexpected, and it is still higher than the European Central Bank's target inflation of 2%. So the expectations are that the ECB will continue lowering interest rates.
All right, Chip, and of course we know the effect of that Trump tariff. That's also on the other hand. But thank you so much for the updates this afternoon.
Thanks, Ini.
Now let's take some stories from Africa. The number of visitor arrivals to Kenya from India is expected to grow by 20% this year as the country aggressively markets its tourism offering in the Asian country. They have the population, I guess. About 15 Kenyan travel agencies over the weekend were in key cities of India to woo travelers into the country and express confidence in the expected growth of the market. Speaking at the close of the annual Outbound Travel Mart that was held in Geo Convention in Mumbai, India, Kenya Association of Tour Operators, the Chief Executive Officer, Fred Kaigwa, disclosed that all indications point to the country expecting to receive more visitor numbers from India by the close of 2025. Now, South Sudan has passed a bill that is aimed at streamlining cash-strapped pension scheme. The Information Minister, Michael Makweli Luwet, says that the new bill, when passed by the Parliament, will also address what he calls confusion on who should collect and pay out pension between the government at the state and the national level. Luwet adds that the Pensions Fund Act 2012 Amendment Bill 2024 was developed by the National Constitution Amendment Committee, a body established by the peace agreement to align previous provisions of the Constitution with those of 2018. After the passing by the Cabinet, the bill is now set for parliamentary debate and final passing to eventually become a law in the country. All right, now let's look at East Africa and a new thing happening right there in East Africa. And we'll see how they're looking to increase trade. So it's more of the ship at this point in time. We have joining us for this conversation now, Rodney Sima is a regional assets management lead in Infraco. So thank you so much, Rodney, for joining us, and good afternoon.
Good afternoon. Thank you very much for the opportunity.
So we hear that East Africa is trying to improve or increase regional trade. What's the strategy at this time?
Certainly. We are catalyzing trade in East Africa by adding a vessel that can move goods, across the lake, instead of what are congested roads, sometimes that take a long time to move cargo. So East Africa Marine Transport has basically just inaugurated a vessel called MV Mpungu that will move goods in a very short time. 18 hours is the journey that's envisaged, instead of 3 or 4 days to move around Lake Victoria. So we believe, between Tanzania and Uganda and the region at whole, it will benefit from just having cargo moving a lot faster, a lot safer, and also with less carbon emissions by moving trucks off the road and putting them on the water.
So what are your major target countries for this new routes going around Lake Victoria?
Yeah, sure, because the Lake Victoria border is on 3 countries, right? Kenya, Uganda, Tanzania. So any cargo moving between the 3 that can be moved onto the vessel will be moved onto the vessel. I mean, for now, we are looking at just moving between Mwanza and Port Bell, Mwanza in Tanzania, Port Bell in Uganda. So we're targeting that route. But looking forward, of course, we're looking at Kisumu in Kenya, which is another port we can call and make it a sort of a triangular type of operation.
And what are the commodities in target? We know Kenya is really good with tea, and they do have their targets for the year. What are the commodities in focus?
Yeah, it's quite varied. I mean, when we did our research some 7-8 years ago, we had steel that was going between the 2 countries. We see now there's a lot of sugar that's coming up. I was there last week again, and there was a vessel offloading some sugar. Timber is also good that moves across, palm oil. So they varied. It depends on the seasonality of it as well, and in terms of what sort of is happening between the 2 countries. But there's a significant amount of cargo that we saw moving on the road by just standing at the border for a few days and just ticking the boxes in terms of what moves. And we feel that that's the cargo that will basically be moving onto our vessel.
So tell us how you would calm the nerve of your would-be clients when you talk about issue of security, maritime security, insurance, the risks, and the costs, the premium on insurance. Those are factors.
Yeah, so remember, this is purely a commercial solution we're providing, right? So we cover the insurance of your cargo coming onto the vessel, which is basically, in this case, it's a full laden truck that you are driving onto the vessel on one end of the lake and then driving off of the other. The cargo owners will obviously have their own insurance that they cover for their goods as they transport them up and down between the different regions. What we're basically securing for you as a cargo owner is that instead of the 4 days, which is increased risk on the road, we're going to put this on our vessel. We've got insurance that covers that should sort of anything go wrong. But that risk is 100% transformed into us, into East Africa Marine Transport, and away from the customer and the transporter. So that's a very good a solution for you as a cargo owner or the transporter who's looking to move goods across the region.
And a World Bank report brings up the issue of inclusive sanitation. What are you doing in that regard?
So as the private infrastructure development group, we're the biggest shareholder into this project, and we put in $25 million to develop up to this point. But sanitation, health and safety, environmental, social, that is one of our biggest drivers and one of our biggest value adds in terms of what we've brought to East Africa Marine Transport. You ask what would that mean? We've brought world-class standards when we're doing the construction. But to answer your question more specifically, in terms of sanitation at this point, while we're transporting the goods, it's a very interesting concept where the truck driver will basically drive the truck onto the vessel, leave the vessel, they leave the truck, and then go up to a cabin where they can sit and relax for 18 hours, less fatigue for the driver. There's toilet facilities, shower facilities in our vessel. And in future, we'll also be providing food, where you can purchase some food as we transport. And when you get to the other side, nicely refreshed, nicely fed, you can carry on your journey, which I think is just a benefit all around to all road users, that the drivers are now rested and are ready to take on the next leg of their journeys.
Any future plan connecting the Eastern Africa to other parts of the continent?
Well, yes. So this is a catalyst for us. This is one vessel of what we're hoping will be 2 of Victoria. We also have had inquiries from Lake Albert. I was having a chat this morning actually on that. Tanganyika is also, there's a project we're looking there as well. And Malawi, we've had some inquiries. So it's water transportation. It's very much underutilized in Africa. Very efficient. There's no roadblocks. There's no potholes. So it's an area that we feel with this vessel, prove the concept, and then we can attract other investors to do the same, or ourselves. As you said, we are looking at other lakes in other regions where we can develop such a project as this one we've done in Uganda.
Forgive me for being selfish. Any connection to Nigeria anytime soon? I'm in Nigeria.
Maybe we'll come there in the future. For now, I think East Africa, Southern Africa is our focus, but definitely Pidge's very much represented in Nigeria. So it's a region that we also hold very close to our hearts.
All right, thank you so much, and wish you the best in connecting the eastern coast of the continent in trade. Rodney Seema, Regional Asset Management Lead at Infraco. All right, now, every market reacts to pronouncements, especially when it comes from President Donald Trump, but I think the crypto markets, how red is your red? I think that's the question we should be asking Ladi. Ladi, how red is your red? Because I see shades of...
incredible shades of red. I don't even know what to call these ones. Like the one we see with Ethereum, XRP.
Yeah. That's not blood red.
Yeah, but
that's bloody red.
I'm a little colorblind, but
at this time, yes. What a comfortable place to be.
Exactly. So it's full on red, just little pockets of green.
Yeah, ignorable.
And surprisingly, the stable coins are also red. Looking at Coin 360 at this point, so it's a bloodbath.
Ladi, I saw this morning I checked the price of Bitcoin,
right,
and I saw 90,000.
90K, yeah.
And then now I see 95,000. Ladi,
it's so volatile.
I mean, this is so scary.
Yeah, it's really volatile at this point. But this might be an indication. This is how February is starting, and it's a month of love. And what's the theme color?
There you go.
Red.
Oh my God.
I guess this
Looking
was
for
expected.
comfort in everything I see.
So we're starting off with a color of Valentine. That's for February. Let's see what the sentiment is like. How are investors feeling? In this market, looking at the fear greed index. Yeah, there you have it. Fear. So fear has come into the market. Now investors are afraid. Is Bitcoin going to fall more? Some don't want to catch a falling knife. Some are trying to find the bottom so they can, follow the bounce up. But there you have it, 44 points. And after fear, extreme fear, that could be next, if the price of Bitcoin stays volatile to the downside. All right, let's look at the headlines in the market now. So $555 million, that was the liquidation. They've tagged this liquidation tsunami in the market. That means traders that expected Bitcoin will go up and put their money on that, they lost most of that. So over 555 million, the longs were liquidated. Those ones account for most of that liquidation price, and that's according to CoinGlass data. So only the ones that said Bitcoin will go down actually made profit, with the coin actually going down. All right, let's see what else is hot. So they've tagged the Trump tariffs. That's what's roiling, the markets again. So I guess it was expected, with the Trump presidency volatility, and we're seeing that play out so far in the market. So it depends on what direction you are playing in the market, then you might not be affected negatively. All right, let's bring in Chimezie Chuta now. He's going to tell us what to expect in this month of February. Hello, Chimezie.
How are you doing today?
I'm doing good. I was expecting to see red on your background there, but I guess you've escaped the red. But January was quite good, for Bitcoin and most of the cryptocurrencies. But we're seeing February now starting with huge drops at this point. Is this just another excuse that the bears are using to drop the market? Is the tariff war really that bad for crypto and Bitcoin?
Well, Ladi, I think I will react to the current market as the storm before the real rain will come. because most of what we are seeing right now has already been factored in previously in the market. Don't forget that Donald Trump has been president for less than 2 weeks, and there has been a lot of uncertainty that has been coming out through the policies that he's been pushing. And much recently, we have seen his tariff wars that he has ignited, and it looks as though the tariff wars are going to have more devastating effect than the physical wars that we were having in Ukraine and in the Middle East. But the truth of the matter is that volatility is a friend of the investor if he understands how to play the game. This is a time for anybody who is interested in the market to actually move in if you still have reserve funds, because I know that it's not easy to get back and buy the dip. Anyway, we always say buy the dip, buy the dip, buy the dip, but nobody bothers about how are you continuously going to get the money to buy the big dip. But assuming that you are someone that has been timing the market, this is a very good opportunity to get in. Right now, most of the odds are less than 50% discount. Bitcoin has dropped significantly. Ethereum, of course, has dropped significantly. And we know that before any bull market, things like this happen. So it's not new. I've been through 3 cycles of the bull markets, and I've seen them happen over and over again. And this definitely is not going to be a different experience for us.
And could this be the start of a bear market at this point, or is it just, regular pullback?
Well, it's so difficult to accurately predict whether this actually is the threshold to the expected alt season or the general bull run. But the fact remains that anytime the market pulls back like this, it provides an opportunity. And don't forget that the retail traders are not really in the game that much. Much of what is going on here are institutional movement of funds, because these are the people who have the large bags that can affect the market significantly. Retail traders don't have that power they used to have probably in the previous cycles as it is right now. So what everyone that is in crypto should expect is that this particular market cycle is unique in every way. I mean, it's almost a year since Bitcoin halving, and we have not seen Bitcoin price double in price, but that does not mean that these things will not happen. I think there's a gathering of cloud, and what we're seeing now is probably the last of it before the bull run sets in.
Right, and talking about the bull run, at some point it was all about the meme coins, and I'm guessing the meme coins will be dropping even, more heavy than what we're seeing with the 10% to 15% drops we see with the top 100 coins there. But let's also circle back to the Telegram games. Is it over for that segment?
Ladi, you know that the sun will first of all shine on those who are standing before it to get to those who are sitting down. Meme coins at this time are expected to be, completely, massacred in the face of what the functional utility products that are out there are experiencing. So Bitcoins shouldn't even be things that we should be mentioning at this time when the streets are red. They should be experiencing real bloody, thick blood red in their own right. But remember that everything in crypto is about narratives. And so the narratives that drove all the success of the meme coins in the previous cycles and in the previous years have all served their tenor. So right now we'll be expecting that the real utility products should be experiencing some breath of fresh air. And that's why some of us who are holding big bags of alts, who are expecting the market to move in our direction, are really expecting that people will begin to look at the value that the crypto has to offer intrinsically, and not just the hypes that are associated with the market itself.
I'm talking about hype. One of those Telegram games, that's Bloom. I know they ended, the first season, and now they started another whole season. And I'm sure most of those players are quite disappointed.
Of course. That's how the market is. It never really goes the way you anticipate. There will be a lot of people who will be happy at how things turned out, and there are a lot of people who will be unhappy at how things turned out. Don't forget that even when the market is red, there are a lot of people smiling to the bank because there are people who are betting against the market. I mean, those who are shorting the market, they are smiling right now and heading straight to the bank. And of course, if you were betting strong on probably an asset like Hamstar and any of those Telegram bots that most of us associated with, you have to understand that your tears is somebody's joy somewhere. And brace up in crypto, bro. Brace up, because the time you're going to be smiling, definitely someone else is probably going to be crying. So that's how this game is played. There's never going to be a time when everybody's going to be happy that they made money. There's nothing like that in crypto. Some people are going to smile and some people are going to cry. That's how it's going to be. And that's why it's called crypto, which means cry to the time when you are going to get your own joy.
Right. And, looking at, February so far, the way it's playing and, into 2025, are you seeing any new trends cooking, or will it be the regular trends we saw that drove sentiment in 2024?
Okay, so on a serious note, the 2025 is a very interesting year to watch out for, not just in crypto, but in general financial market, because like many people anticipated, a Trump presidency is going to upset a whole lot of things. And for me and a whole lot of people who are watching the markets, we know that regulatory clarity is gradually coming in. America first in most of the things that we know has always defined how the industry participates in it. So with the expected regulatory clarity coming from the US concerning crypto, it's going to really enable a whole lot of innovation for us in the rest of the world. That being said, we're also seeing that many countries, and even when you go to states in the US, many of them are showing signs or interest in stockpiling Bitcoin as a reserve asset. That's also something that is going to, be seen across different jurisdictions. You're going to see different jurisdictions diving into Bitcoin as a reserve asset. And of course, no country wants to be the last to buy. And when that moment comes, when everybody wants to jump in and buy, that's when we are going to be experiencing that parabolic move of pricing that everybody is expecting.
All right, we'll definitely keep watching out. We're also watching regulation, that's cryptocurrency regulation in Nigeria. Are you expecting any surprises in 2025 for Nigeria?
Nigeria is already on course. Like I always say, kudos to SEC and the current DG. What we expect is more emphasis on compliance, because the industry and the playing environment must be monitored, and there has to be very strict measures put in place to monitor both the service providers and the participants in the market. So once these things are put in place, I anticipate that Nigeria is going to be experiencing an explosive 2025 bullish market for crypto.
All right, thank you so much. Always great having your perspective. Chimeze Chuta is the chairman, National Blockchain Policy Implementation Steering Committee. Thank you for coming on.
Thank you, Ladi.
All right, so there you have it. It's a bloodbath. I'm sure some investors are wondering, okay, where's the bottom? Where's the bottom? Where are they going to find it?
I can't get over what Chuta said. That
right.
While some people are crying, some people are actually not just smiling but laughing to the bank.
Laughing to the bank.
I guess what we can say is wait for your turn.
Right.
Your time will come when you will laugh, and then the other party would be crying.
Let me see if I can laugh to the bank right now. Ha 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 ha.
All right, so that's it on the program. Thank you so much for being a part of it. President Trump is still moving the markets. We'll see what happens tomorrow. We'll be back here at 1 p.m. But first, Ladi will be here 10 a.m. tomorrow. God's grace. But I'll see you tonight for the stock market report. Hopefully, those tariffs will not affect our NGX.